Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top order on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about EURUSD. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect, then we'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And by the end of the video, I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly support and demand area. In fact, throughout the years, for many occasions, the market has tested this zone and rejected it to the upside quite aggressively. In all this time, only once the market managed to break below the zone, which was essentially right here. And when the market broke below, it anyway ended up being just a fake breakout to the downside, because immediately after breaking below, the market broke back above and continued respecting this exact same area as demand and support. So this was definitely a fake breakout, and this is still a very strong historical demand and support level. At the moment, we can notice that the market has just tested its zone and rejected it to the upside quite aggressively, with a huge impulse to the upside fueled by strong institutional buying, which again is something that we will speak about in just a few moments. What we can notice if we focus on the most recent price action is that what we got after this impulse is now a period of horizontal consolidation. In a situation like this, what you expect is, after such a huge impulse, to see some sideways price action or even a bit of a deeper correction before the next leg up. Because what we know is that in the market, no market can go up in a straight line. After every impulse, there needs to be at least a healthy correction or even some horizontal price action, so a consolidation phase before the next impulse to the upside. Because if a market is just going straight up, at some point it becomes overextended to the upside, and that is not a healthy uptrend. Dropping down on the weekly time frame, what we can see is, first of all, a perfect inversion of trend. This is exactly what you want to see. When you want to see an inversion of trend in the market, you want to see a situation in which you are clearly identifying lower lows and lower highs. Then you need to have an inversion pattern, which in this case is a double bottom created exactly at that demand and support area that we have previously identified on the monthly time frame, and then you expect this shift to a completely different market, so in this case higher highs and higher lows. So what you expect again is lower lows and lower highs in inversion pattern, for example double bottom, triple bottom, head and shoulders, any kind of reversal pattern. In this case it was a double bottom, and then you expect higher highs and higher lows. That is a perfect inversion of trend, and that is exactly what the market just did here. So on the weekly, everything is quite clear. Now let's identify the structure. The structure here in the weekly time frame is clearly at this level. This was the previous resistance from which both these rejections to the downside were created. Now the market broke above that zone, so this previous resistance is now turned support. There's a good probability of seeing more institutional buying inside of this level, potentially pushing the price higher and creating another rejection of previous weekly resistance, now turned support. Just a quick interruption, let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Dropping down on the daily time frame, what do we see? Now, here on the daily, I spoke about EURUSD a couple of times already with my previous analysis. I spoke about it when the market was at this level, and I explained all the reasons for which from here I was expecting this rejection to the upside, which is in fact exactly what the market did. And then again, when the market was at this level, I explained all the reasons for which I was expecting this rejection to the downside, which again is exactly what the market just did. And by the way, I will link in description these two previous analyses so you can go and check them out for more free education. But at the moment, what do we have? Well, at the moment, we have a market which is in an area which is not really a clear test of this demand and support, but at the same time, it isn't really breaking above the previous high yet. So we are kind of in a middle ground. So let's go and see what is going on when it comes to the commitment of traders analysis. Now, this is where the problems start to essentially surface. The main issue is that the US government right now is in a shutdown. You probably heard that already in the news, but when there's obviously a US government shutdown, you don't get the release of new data because every non-essential department of the government is obviously closed. So we're not getting the new reports, which is a bit of a problem because we have to rely on a bit more older data. But soon the US government should resume as usual, so we will start to get the reports again. Now, what we can notice is that what was happening with the very last reports is a decrease in net positions from 125K down to 114K. So we were starting to see an increase in the shorts from an institutional side of the market, going from 112K all the way up to 138K. Longs were getting decreased from 258K down to 252K. So the last reports were showing some weakness. Institutions were adding shorts and closing longs. So let's keep that in mind and move back to the chart. Obviously, also keeping in mind that we don't have the very last reports. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what we have is just a structure that can help us in guiding us to understand what the institutional side of the market is doing, even though we don't have the very last reports. Now, if the market will break above the high, this means that institutions have a high probability of being adding longs, creating this breakout to the upside. So if we will see the break above this previous high, this is where things get very interesting because a break above would make this previous resistance become support. So if we do see this break and retest, at that point, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection higher for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.